Enhanced due diligence is the highest level of due diligence carried out to verify the identity of clients, where additional information is required to highlight the increased risks associated with the client. So when should enhanced due diligence be carried out? Enhanced due diligence is required where additional measures are expected to be taken when monitoring business relationships that pose a high risk. To mitigate the increased risk, a higher level of due diligence is required, as the risks cannot be detected by customer due diligence. A high-risk situation occurs where there is an increased possibility of your business relationships, transactions, or clients being involved in money laundering or terrorist financing. It is also carried out where more frequent and intensive monitoring is required, since enhanced due diligence policies are rigorous and robust. Examples of high-risk categories of customers include complex legal arrangements such as unregistered or unregulated investment vehicles, companies that have nominee shareholders or a significant portion of capital in the form of bearer shares, persons from or in countries which do not or insufficiently apply the Financial Action Task Force's recommendations, and politically exposed persons as well as persons or companies clearly related to them.
But who would be a politically exposed person?
It is an individual who is or has been entrusted with a prominent public function in a place outside Hong Kong.
Some of which includes a head of state, head of government, senior politician, and senior government, but does not include middle-ranking or more junior officials, and a spouse, partner, child, parent, or close associate of the individuals previously mentioned. When determining whether a customer is a politically exposed person, one should refer to publicly available information and carry out screening against commercially available databases and reports on corruption risk by governmental and commercial organizations. If an individual is known to be a domestic politically exposed person, the financial institution must conduct a risk assessment to determine whether the individual poses a higher risk of money laundering or terrorist financing. When applying enhanced due diligence, several factors should be considered, including customer information, source of wealth, approval, and enhanced monitoring. Regarding customer information, the enhanced due diligence process involves obtaining information on connected parties, accounts, or relationships, as well as regular updates on the customer profile. Reasonable measures should be taken to establish the customer's intended nature of business and the source of funds, ensuring money laundering and terrorist financing are not involved. Approval should also be obtained from senior management to commence or continue the business relationship with your client, and enhanced monitoring must be applied to the relationship in accordance with the assessed risks. However, what the enhanced due diligence process entails will vary from case to case, depending on the nature and level of the risk associated. It could involve collecting additional detailed information to verify the customer's identity and source of income, or involve an adverse media check.